As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Today we have a returning guest, renowned silver guru David Morgan, founder of the Morgan Report, is here with us again on Reluctant Preppers to give us his perspective on some of the mindset that it takes to weather these confusing times in the physical and paper precious metals market for people who are concerned about what's going on in the reality of our money supply and our currency and our debt. It's gotten to be a long ride for people who have felt convinced that there's more going on than what meets the eye, and he's here to help us see some of that, shine a light on some of those dark shadows. So, David Morgan, thanks for joining us here again on Reluctant Preppers.
It's my pleasure, Dunnigan. Thank you.
We've had a couple of guests over the past months where there's been a continued bottoming in the precious metals market to talk to us about how long can this continue to drag on, and all the different people. Bill Murphy from GATA.org, others have been on here to talk about some of the unbelievable mechanisms that are being employed to maintain this disparate reality between the actual scarcity, for example, of silver versus this record below production prices that have been maintained. But I wondered if you could weigh in primarily with us today on the mental and philosophical aspects of how steady-minded person who's interested in real money, how that's consistent with basically the mindset that's going to get us suited for this current long game or the slow motion train wreck that we're enduring with despite the dangers that many people believe are really present in our debt-based economy. So if you could help us understand what's the connection between being a real money enthusiast and being able to weather some of this long endurance trial we're in.
First thing I would say is that, as far as a long-term perspective, I certainly hold that, because back when I learned about the financial system, or more specifically the monetary system, and how fractional reserve banking worked, and that there's no backing. In fact, as most people know that listening to my interviews, I was 11 years old when silver was taken out of the coinage in 1965. But I thought at that time, not at 11 years old, but during the first bull market from roughly 1970 to 1980, that during the 1980 run-up, that one, it was getting a little overdone, but I never really felt that you would see a 20-year bear market in the metals, but you did. And I moved on from a core position that I held to looking at other investment opportunities, and was pretty successful in other areas, but never gave up on the absolute fact that precious metals or a sound monetary system is imperative for the well-being of everybody, not just a nation state, but globally. International trade depends upon an honest and just system, or honest weight measures, if you will. So coming to current time, I coined the expression that the silver market, especially more so than the gold market, is smaller and more volatile, and that there would be periods during this bull market that it would scare you out or wear you out. And that expression is taken to heart by many people. And we've seen the point now, Dunnigan, where it has worn people out. The psychology changed, I think, significantly on gold around the 1550 level, when it breached that to the downside, and at the same time, or nearly so, the $26 level on silver. Once those two levels were breached to the downside, they have been under those levels for quite some time now. And the psychology of a bull market has basically left the market. So there are very few people out there that are holding on or advocates of buying at these levels. And I think, at the risk of being wrong one more time, since calling bottoms have been much more difficult for me than calling the tops, that we may have double bottomed in silver. I said the 14.15 intraday low in the aftermarket at December 1st, 2014 was it. And since then, we've got a slightly lower close of $14.11, so 4 cents difference very recently. But since that time, we're back over 15, And the gold-silver ratio has dropped from about 80 to 1 down into the high 70s, but nonetheless, the trend is clear. The last 3 or 4 weeks, silver has outperformed gold week over week. So basis the fact that the fact that the sentiment is so poor, the market has been in these doldrums for more than 4 years for silver investors and about 4 for gold investors. And everyone almost to a man has given up on the market. I think that the bottom really is here now, and we only have a few more months to wait to determine, one, if that's a true statement, and also to watch market activity, which means I'd like to see silver like over the $18 level and hold, in gold, let's say, over the $1,200 level or so. And if those were to manifest, and we saw that day after day where they started to develop a new floor and some good volume into the market, I think you would see, that the bottom truly is in. I just want to go on a bit longer because the real fact, more important than my opinion or chart reading or whatever you want to call it, is that the fundamental underlying fact of the inability to source silver at the retail level during these extremely low prices is very telling. Now, I realize that the retail market is only part of the market, and there is the wholesale market, which is the commercial bar market. But nonetheless, the inability for the government mints to meet demand for even 100-ounce bars to be postponed 4 to 6 weeks, for the junk bag market to have premiums of like 30, 40%, all these things are very, very clear evidence that something is not right in the silver market. And you can look at the gold market in a similar manner, although not identical. There are pressures in the gold market, more on an international level or a fund manager type level than you see in a retail level. But nonetheless, these are clear signs that the price setting mechanism is not functioning as it is supposed to determine the availability of a given commodity, and especially in the precious metals.
Right. And then all of this that you're describing in the metals market is happening in parallel with this unprecedented debt exposure that's been growing and derivatives exposure that's been growing. Do you see any evidence, or from the people you've talked with, of any reduction in risk in the overall global economy or the debt status of sovereign nations, or anything else that would lead you to believe that there's an authentic confidence that's the underpinning of the real reason for not the need for flight to a safe haven in precious metals, or do you see no clear evidence of reduced risk in the broader economy?
Well, just as if we think we can solve a debt-based problem with more debt, which isn't we the people, but the authorities, the Federal Reserve in particular, but the entire banking system on a global basis, the main problem is debt, and yet all they try to do is create more debt to solve the problem, which is absolute and total insanity. So I want to notch that down one step. And the biggest problem within the debt structure is how the derivatives are manufactured at will using all kinds of strange algorithms that have nothing to do with reality. And so the derivatives problems that were exposed during the subprime mortgage debacle, which caused the crisis, or at least some think caused, or main cause of the crisis of the 2008 financial system, was subprime mortgages and derivatives in particular. And since that time till now, all that's happened is more derivatives have been created. So it's hand in hand. One is the biggest problem is debt, and the debt has been increased to try to solve the problem. And the derivatives exposure makes these banks extremely vulnerable. So to fix that problem, they've added more derivatives. So this is absolute, total, and complete insanity. By anybody with a sixth grader on could see this very clearly. But nonetheless, the authorities that are running the banking system and the political structure globally are basically going along with this, with the exception that the BRICS countries pretty much have made a stance and said, look, these are my words, not theirs, but they have gone to great lengths to try to move themselves away from the Anglo-American empire, increasing debt to solve the problem, increasing derivatives to solve the derivatives problem, and try to move into a system where they have a new settlement system outside the SWIFT system and a banking system that could be somewhat immune to the ongoing insanity that's taking place in the financial markets. In fact, Russia's basically said they're not sure they even want the dollar anymore. And China has spoken with action louder than words by offering about $100 billion in U.S. Treasuries in a month's time frame. So the BRICS are obviously trying to the best of their ability to not rock the system too much, but to create a space for themselves to operate in the event of that inevitable day when the dollar has some type of failure, or there's some type of reset, or there's some type of bond crisis or stock market crisis, or all four at the same time for that matter.
So if those large players are positioning themselves to reduce exposure to that collapse, bringing it way back down to the individual and the individual household, if you could just remind people, despite all the static, let's not try to be, just subject to the mind, the groupthink that's out there and what we hear or don't hear. But if we want to be smarter than a fifth grader, what would the prudent individual and the prudent homeowner be doing at this time?
Well, one thing is to be more self-reliant. And that's kind of, it's pretty late in the game if you're just getting this information today. And what does that mean? And that means different things to different people. But I think a good idea would be to do like the Ben Franklin list, which is simply a sheet of paper with a line down the middle, and you put a plus on one side or a minus on the other side, or what you absolutely need to exist and what you maybe want for a comfortable lifestyle, and look at what you need. And I mean, that's pretty easy to do. You need shelter, you need food, you need water. Obviously, you need a job of some type. What you don't need, you don't need the latest, iPhone. You don't need the latest, big screen TV. Those are wants. So I think that's a place to start. And of course, self-reliance doesn't necessarily mean that one person or one family does everything. That's ridiculous. Even in an agrarian economy that we were, let's say in the 1800s, that wasn't the attitude. The attitude was more community, that everyone had a great deal of skill sets, but nonetheless, some people had different skill sets than others, and you traded. So that's something to really think about, is who are your real friends? Know your neighbors, know what their attitudes are, and find out how you can help each other. Because whenever this reset takes place, and it will take place, no one knows exactly how it will look, because it will be different in different parts of the country. Or different parts of the world for that matter. So there'll be certain areas that people are pretty self-reliant and have pretty low wants and basic needs, and a low population density, and it probably won't have a huge effect on them. Whereas there'll be other areas where everything that people need, they're dependent on someone else to obtain it, i.e., let's say the government, for an example. And since that could have great weakness during times of stress, those people are more vulnerable. So I think you're getting the idea. As far as the precious metals are concerned, that would be something to protect wealth or barter in the worst case conditions that you would want to have on that list, if and only if your priority of needs was met first. In other words, do you need to buy silver if you haven't stored some, foodstuffs? And the answer would be no. You should really take care of first things first. And, I'm not huge on the prepping thing, although I'm big on it. So maybe I contradicted myself. I mean, I'm not looking to have, 6 years worth of food stored, but I think 6 months or at least a few months worth is probably very prudent. The reason I say a few months is because once the system starts to deteriorate more and more, you might take things for granted today that will be harder to obtain later on. So even if you bought too much food, whatever that means, that in itself could be a great barter item, or a means of helping your neighbor, have a couple good meals or whatever to help them out. that type of thing. So there's lots of ways to think through this. I certainly can't think through every individual scenario. The main thing is to be educated about the possibilities. And anyone that's studied monetary history to the level I have, and certainly I'm not the most studious on that topic, but certainly I've spent much more time on it than most people. These things do happen. And I just put out a update to our free list, our free member list, which is if you just go to silver-investor.com, scroll down to the bottom and ask you for a name and an email. And for the next 3 weeks, we put out this film on the empty ATM, which shows what happened in Argentina's financial crisis in 2001. And that's really a good example based on a documentary of actual facts, people in the street being filmed, exactly what happened, of what could happen here. In fact, I think it could happen here. Not only do I say it could, I think it will. But on top of that, it may not be, excuse me, as congenial as it was down there. Not to say that everybody's holding hands and saying, oh, things are wonderful, but there was some violence. But it's very limited, really, relative to what I think could happen in areas in this country where people are used to getting whatever they desire. Well, I should say whatever they desire, but getting their basic needs met without any real effort.
Well, you've given us a new perspective. David Morgan, also known as Silver Guru. And if people want to find out more of your work, where can they find you on the web?
Certainly, my work is at the YouTube channel, Silver Guru. It's at Twitter at SilverGuru22. It's on our website, which is silver-investor.com. And then, of course, if you're really interested in the debt problem and how to protect yourself, I suggest you take a look at Amazon or our web page, that is thesilvermanifesto.com. Check out Amazon. There's lots of reviews, a few negatives, but most of them are 4 or 5 stars. And believe me, Chris Marchese and I took 9 months to write that book. It wasn't an easy task, but we did it to get this information out to everybody. Basically, it's more than silver, but that's the main thrust of the book. But the underlying idea is how bad this system is and why it will not last much longer and what you can do about it to protect you and your family. And beyond that, I have the last chapter that talks about beyond silver, which looks at us and the type of questions that you asked Dunnigan about who we are, and where we want to be in the future, and what the important questions of being a real human being are all about.
Well, David, it's always an honor and a privilege having you here, and you always bring a deeper perspective to make us to think more thoughtfully about the questions that we ponder here on Reluctant Preppers, and we certainly hope that we can have you back again soon.
Thank you very much. My pleasure.